Welcome to Breaking News to Trading Moves. Today we are looking at the Google antitrust situation. But we aren't talking about the verdict itself, we are looking at a specific legal maneuver regarding the remedies and what it means for the market right now.
Exactly. It might sound a little dry on the surface, a motion, an appeal, but this is really where the rubber meets the road for investors. Google is pushing back against a U.S. judge's order, specifically about data sharing.
Okay, so let's get the facts straight. Google was found to be a monopolist. Now the court is deciding on the consequences, and Google has just filed a request to pause one very specific part of that.
That's the headline. They're asking the judge to hit the pause button on the requirement to share their search data with rivals, at least until the whole appeals process is over.
And their reasoning is what?
Their reasoning is that if they have to hand over this data now, and then say they win the appeal in 2 or 3 years, well, the damage is already done.
It's the whole you can't unscramble the egg argument.
That's it.
If you force me to give my secret recipe to a competitor today, and a court says, oops, my mistake, in 2027, it doesn't matter. My competitor already has it.
That is precisely the argument they are making. They're claiming irreparable harm. In the world of trade secrets, once the information is out, it just loses its value as a private asset. You can't put that genie back in the bottle.
But is this a genuine concern for them about trade secrets, or is this just a way to stall, to keep their advantage for another few years while this works its way through the courts?
It's likely a bit of both. From a purely legal standpoint, the argument does have some merit. Search data, specifically what they call click and query data, is incredibly valuable.
That's the record of what people search for and what they actually click on.
Yes. It's the logbook of human behavior that Google has spent 2 decades collecting. It's what trains the algorithm. If they hand that over to Microsoft or, some startup, they are effectively giving away the keys to the castle.
Right, because a search engine isn't just the code. It's all that historical data telling it what the right answer is when someone searches for best running shoes.
Precisely. And Google is saying, look, this data is our trade secret. If we share it, we lose our competitive edge for good, no matter what the final legal outcome is. So they want to pause that requirement.
But they aren't trying to pause everything, are they? I saw they offered some kind of concession.
They did. And this is the strategic part. To show the court they're acting in good faith, Google said they would comply with other remedies immediately.
And that was...
Specifically, they're willing to limit some of their app-preload contracts to a duration of just 1 year.
Okay, so those are the deals where Google pays a phone maker to put the Google search app on the home screen. They're saying, fine, we'll keep those contracts short.
It's a calculated move. They're sacrificing a little bit of contract stability to protect the crown jewel, which is the data. They're basically saying, regulate our business deals if you have to, just don't make us give away the fuel for our algorithm.
And we should probably talk about the timeline here. This isn't getting resolved anytime soon. There's a date I saw mentioned, February 3, 2026. What's that about?
That's the deadline for the antitrust enforcers, the DOJ and the states, to decide if they want to appeal the judge's rejection of the much stronger remedies.
Stronger than data sharing? You mean like a full breakup?
Yes. The structural remedies. We're talking about forcing them to sell the Chrome browser or completely banning those payments to partners like Apple for default status.
So the really big threats are still out there.
They are. The judge took some of those off the table for now, but the enforcers have until early 2026 to decide if they want to fight for them again.
So for the next year or two, the main event is this battle over data sharing.
Correct. And that brings us right to the idea of the moat.
The economic moat. That competitive advantage that protects a company. If Google loses this specific fight and has to share its data, what happens to that moat?
It gets narrower, a lot narrower. The moat is the data advantage. Google search results are better because more people use Google, which generates more data, which makes the search results better. It's a self-reinforcing cycle.
And if competitors get access to that same stream of data,
that cycle isn't exclusive to them anymore. The barrier to entry just plummets. If you're a competitor, you don't have to spend 20 years building up a database of what people want. You could get it overnight.
And that implies market share could start to move around in search, in AI, and of course in digital advertising.
Exactly.
So let's talk about who might grab that market share. If Google's moat narrows, someone else is going to cross it. We have to start with the other search challengers and AI companies.
The thinking here is pretty simple. If the data advantage shrinks, the product quality of competitors goes up. And the biggest beneficiaries are the companies that already have the massive infrastructure to actually use that data.
Right. We're not talking about a couple people in a garage building a new search engine. You need huge computing power for this.
You do, which points us directly at Microsoft and Meta platforms.
Okay, let's start with Microsoft. The ticker is MSFT. They've got Bing, they've got their partnership with OpenAI.
Microsoft has been trying to break Google's hold for more than a decade. Their missing piece has always been volume. Their algorithm is pretty good, but it just doesn't see as many of those obscure, long-tail searches that Google does.
So if the court forces Google to share that data,
Microsoft can feed it right into Bing and their AI models. It would basically flatten their learning curve.
suddenly, Bing's results for very specific topics could be just as good as Google's. That makes MSFT a potential winner here.
A primary one.
Yeah.
And then you have Meta platforms, ticker META. Now, they're not a traditional search engine, but they are a huge player in AI.
Right. Meta AI is becoming more and more of a search tool. People ask their AI assistants questions all the time.
And Meta needs that same ground truth data to make sure its AI gives good, accurate answers. Getting access to Google's search index would be a gigantic boost for their Llama models.
So for both MSFT and META, it's like getting the raw materials for free or at a regulated price that they used to have to spend billions trying to create on their own.
That's a good way to put it. It lowers the difficulty setting on their research and development.
Okay, let's follow the money. Search is one thing, but the revenue is in advertising. If Google's grip on search loosens, does the ad monies start to move?
It's very likely to reallocate. We'd call it diversification. For a lot of advertisers right now, Google search is where you start and end your spending because it just works. It's where you find people with high intent.
People who are ready to buy something. If I search for buy noise-canceling headphones, I'm about to spend money.
And advertisers pay a premium for that moment. But if search behavior starts to fragment, if people start using Bing more, or asking an AI, advertisers will look for other high-intent platforms.
And the biggest alternative for I want to buy something has to be Amazon.
That's the logic. Amazon, ticker AMZN, is right at the bottom of the funnel. If you're an advertiser and you're getting worried about Google's performance, you can move some of that budget over to Amazon ads. They already have all the purchase data.
So AMZN could benefit from that spillover. What about outside of those big walled gardens? What about the open web?
That brings us to the Trade Desk, ticker TTD. They're the leading platform for buying ads across the open internet on streaming TV, news websites, audio apps, you name it.
So the thinking here is that if the Google walled garden gets a crack in it, advertisers might feel less dependent on it and start spreading their money around more.
Correct. TTD is kind of the anti-Google play in the ad space. If the market becomes less centralized around one company, independent buying platforms tend to see more volume.
This leads to another area that I think people often overlook: measurement and verification. Because if I'm an advertiser and suddenly I'm spending money on Google, Bing, Amazon, and the open web, my life just got a lot more complicated.
And complexity is the key word there. When Google was basically the only game in town, you just had to trust their metrics. You didn't really have a choice. But in a fragmented market, you absolutely need a referee.
You need someone to tell you, did the person who saw my ad on YouTube end up buying my product on Amazon?
You need independent verification. You need to know if your ad ran next to safe content. This drives demand for third-party measurement tools.
And the two companies we're watching there are Integral Ad Science and Double Verify.
Right. Integral Ad Science, that's ticker IAS, and Double Verify, ticker DV. These companies sell the tools that help advertisers make sense of a messy, multi-platform world.
So as the ad ecosystem gets messier because of these antitrust actions, IAS and DV get to sell more cleanup services.
That's the thesis. They're like a tax on complexity.
Okay, we've gone through the potential winners. But, market share is often a zero-sum game. If someone wins, someone else has to lose. And we have to start with the target of the lawsuit itself, Google.
Or Alphabet, more specifically. We have the two tickers. Class A is GOOGL and Class C is GOG.
Beyond just the legal fees, what's the actual business risk for them? Is it just about losing a few searches to Bing?
It's really about margin pressure. Google Search has always had incredible profit margins because, well, they didn't have to fight that hard for traffic. People just came to them.
But if they have to fight harder for every single user, their cost of doing business goes up.
Exactly. And if that data flywheel starts to slow down, if they lose that data exclusivity, their product advantage narrows. That could mean they have to lower their ad prices to stay competitive or spend more on marketing. Both of those things hit the bottom line.
So for GOGL, the risk is a slow compression of their profitability over time.
Correct. It could change the basic unit economics of the search business.
Okay, now, the next group of potential losers is a bit counterintuitive because we usually think of them as winning when Google pays them. You've called them the default partners.
This is what we could call lazy money risk. We know Google pays billions and billions of dollars every year to companies just to be the default search engine on their devices.
And the most famous example is Apple, ticker AAPL. Google pays them something like $20 billion a year just to be the default search on Safari.
And for Apple, that is almost pure profit. It goes straight to their services revenue line with almost no cost attached to it. It's just a check they cash.
But if the antitrust remedy says, Google, you can't pay for these default placements anymore, or you can't pay as much, then that check disappears.
Or it shrinks a lot. And that's a massive revenue hole for APL to try and fill. It's the same for telecom carriers like Verizon, ticker VZ. They often have revenue-sharing deals for search on the Android phones they sell.
So for VZ and APL, this is a regulatory risk to a very comfortable high-margin revenue stream. There's sort of the collateral damage in this fight.
Collateral damage is a perfect way to describe it. They didn't break any laws, but their business model relied on a market structure that the court is now trying to take apart.
Finally, we have the publishers, news organizations, websites. They usually complain about Google's power. So why are they listed as potential losers here?
It really comes down to uncertainty. Publishers have built their entire businesses on referral traffic from Google.
So if I type election news, Google sends me to the New York Times.
Right. And the New York Times, ticker NYT, or News Corp, ticker NWSA, they have built their whole subscription and ad models around being able to predict that traffic. They understand how Google's algorithm works.
They've spent years on search engine optimization, or SEO.
Exactly. They've optimized for Google. Now, if these remedies suddenly change how search results are displayed, or if the market fragments and they have to optimize for Bing and Meta AI and everything else all at once, that's chaos for them.
And traffic volatility is a CFO's worst nightmare. You can't project ad revenue if you don't know if you're getting 10 million visitors next month or 5 million.
That's it. So even if they don't like Google's dominance, they are sort of addicted to the stability it provided. A chaotic, fragmented search market just increases their costs and their revenue risk.
So NYT and NWSA could face a really difficult period of instability while everyone figures out the new rules of the road.
That is the fear. It disrupts the predictable flow of eyeballs that they depend on.
It really paints a picture of how interconnected everything is. You pull one legal thread at Google, and it can affect Apple, Microsoft, the Trade Desk, and the New York Times.
That is the big takeaway. The headline is just about a pause in a legal proceeding, but the mechanics underneath are about how money and data flow through the entire digital economy.
And the core question is about the nature of that data. Is it a trade secret that one company can own, or is it more like a public utility that everyone should have some access to?
And how the judge answers that question could move the valuation of all these companies. It could move value from the incumbent, Google, to the challengers and the infrastructure providers.
Well, we'll be watching closely to see if the judge grants this stay, or if those data floodgates open up before the appeal is even heard.
And remember, February 2026 is that next big date on the calendar. This story is going to play out slowly, but the market might try to price it in much more quickly.
That is all the time we have for today. Thank you for listening to Breaking News to Trading Moves. Before we sign off, we just need to handle the legalities.
Yes. Please remember that the content discussed today is not financial advice. We are not recommending that you buy or sell any of the securities mentioned here. This is purely the opinion of the author and an analysis of the news.
Always do your own research. Thanks for joining us.